Private Lender Podcast, episode 108.
The Private Lender Podcast quote of the day comes to us from Kim Garst, who said, "If you don't value your time, neither will others. Stop giving away your time and talents. Value what you know and start charging for it."
This is the Private Lender Podcast, the show that shares practical advice and know-how for new and seasoned lenders, from private mortgages on single-family houses to joint ventures on commercial projects and beyond. Discover details about investment vehicles that you won't find at your local bank or online broker. Listen and learn from private lenders and real estate investors, as well as from professionals and entrepreneurs, as they share the details, strategies, and the insight that allows for successful and prosperous lending. Now, get ready to increase your ROI. Here's your host, Keith Baker.
What's going on, everybody? Greetings from the energy capital of the world, Houston, Texas. And welcome to episode 108 of the Private Lender Podcast. I'm your host, Keith Baker, and I'd like to thank you for sharing your time with me today. I'd like to ask you how you doing in this coronavirus. You all right? You hanging in there? You tired of everybody moving the goalpost on you? Saying one thing, going from, hey, look, we're going to be fine, from 1 minute to, oh my God, we're all going to die. Anyway, I hope you guys are doing well. That was a failed attempt at humor, so let me just kick into the spiel. Thanks for listening to the Private Lender Podcast. It's the only podcast teaching regular folks just like you and me how to become passive real estate investors, and also teaching how to keep our money safe investing with private lending. If you're looking for practical tips and advice on being a private lender, a successful private lender, then you are in the right place. But if you want to learn from my mistakes so that you can avoid them and shorten your own learning curve, well, then pull yourself up a chair and pour yourself a drink, my friend, because this podcast is for you. Today's topic is one that I'm ashamed to say I haven't really covered in the last 100 episodes or so. But today that gets changed. And the topic is this. I've often said the easiest way to get into private lending is to loan your money to a hard money lender, let them do all the work, find the borrowers, vet the deals, look at the numbers, look at the properties, service the loans, make the payments. Now, you're not going to get as much interest or points, or you're not going to make as much. But then at the same time, this is really getting passive because you're not doing as much either. You're letting that hard money lender make the decisions, do those works, vet the deals, tell the borrower no, or tell the borrower, yep, we'll do the deal, but you got to have more money, more skin in the game. And so today I interview Jason DeBono from NuView Trust Company, and this is exactly his own personal strategy. And I'm going to let him discuss it, but it's like the truncated version of what I've been spitting out for the last 100 episodes or so. So yeah, without any further ado, let's go ahead and get into the interview with Jason DeBono.
Baba Booey.
Lender Nation, with me today is Jason DeBono from NuView Trust Company. Jason, welcome to the Private Lender Podcast.
Hey Keith, good to be here.
Hey, how are you, man? How's it over? You're in Florida, right?
Yeah, we are middle of summer in Florida, so it is hot, and I think like everyone else, we're all kind of adjusting and adapting to the new normal, but all is well, thankfully.
Yeah, we're recording this early July 2020, right in the middle of the Corona universe. So, all right, well, I hope you guys are staying safe. Just curious, how is NuView Trust handling Corona? Are you allowing people into the office, customers, or how's that working? Is it all online?
Yeah, so we, our business is nationwide. So while we do a fair bit of business comes into our office, it's a pretty small amount. But yeah, even before the state shut down, we had already kind of closed our office to visitors, and have been working through getting people working from home. But in our business, because of the line of work that we're in, there's just too many things. We can't let the whole office go home. There's just unfortunately too many things that come into our office, checks and mail, and stuff that sensitive client information. So we want to make sure that we're protecting our clients, and so we've got a pretty good office building here that we can space out in, and we're taking all the recommended precautions and then a little bit more to try to keep the place spread out.
Gotcha. Love using self-directed IRAs for private lending. And so, but you have where I do a lot of it myself. You let someone else do the legwork for you, which I really want to hear about. And please explain it to Private Lender Nation, that how your process goes from, having the money in your self-directed IRA to making contact with that hard money lender, looking at the deal and, flowing through the transaction. If you could just start with that.
So, being here, obviously my time is spent, overseeing the business, and that takes a significant chunk of my time. And so, I don't necessarily always have time to go out and really pound the pavement and really be out in the marketplace to find deals directly. And so for me, and I've done this for the last 15 years, I've got about 6 or 8 different groups that are in the lending business that, I think are bright and kind of do what they say they're going to do. And I let them source the deals for me. So, I just make it known that, hey, I've got retirement money. If you've got a deal that you don't have the funds for, but you still want to kind of broker it and make the money off of it, I'm happy to be a lender. So my approach, and I can't speak to everyone, that this is the best approach, but I trade interest for points. So anytime there's a loan that exists out there, either it's been written and they just want to sell it and recoup the cash, or it hasn't been written and they want to originate it and they need someone to have the money to do that, I have no problem giving up any of the points up front for the right to own the loan and own the interest. So it keeps me from having to go out and do the legwork, right? It costs me a few percentage points of potential value up front. But, in my IRA, if I can have someone, tee me up loans at 8 to 14%, time and time again, and I can cherry pick out the ones I want to do and say no to the ones I don't pretty easily, I find it to be a really effective strategy.
Right. So you're getting between 8 and 14% on your interest rates.
Yep. Typically 8 to 14%. Very rarely I've done under 8%. It's, a pretty strong deal, shorter term, and, really strong. And there may be some additional value like an equity kicker at the end or something. So I'm a believer in making the deal work. So, while about 80% of the deals I've done are all, through kind of a broker, about 20% of the loans that I've done have been direct. And so, if the deal works better at 5% interest, obviously I don't want to make 5%, but I don't mind 5% interest, if I'm getting 10% of the deal on the back end or some equity kicker participation. So there's always a way to structure a deal. And at the end of the day, if we can't structure it, we'll move on and find another deal. But so, yeah, we're pretty flexible in the way that we participate, so long as I like to keep the risk low and I like to keep the opportunity, as steady as possible.
Right on. And how long are your notes normally when you loan out for? How long were you loaning them for?
Almost always a year.
Okay.
The one thing I do, again, I don't know if this is the right approach, but anytime the loans extend, I do offer an extension and add a clause, even if it's someone else's loan, that I'm purchasing, and I keep the points on any extension. So, if you want to extend at the same terms, and I usually do extensions in 3 to 6 month tranches, and I'll do them at 1% for each extension. So you want to extend for 3 more months, it's 1%.
Okay.
And then I get to keep that point.
Nice. Okay. And what are your hard money lenders? Do you know what their points are usually? He said you let them have the points because that's how they're going to make their money in the churn of turning the deals through. Off the points, you're going to get the interest. How are they? Do you know how they're getting paid or how much percentage wise?
Yeah. I mean, if typically it's 3 to 5 is what I see, but as the world gets a little bit more competitive, I mean, in 2010, 11, 12, I mean, we're here in Florida. I mean, we were writing loans at, 3 to 5 points and 14% interest regularly, because the deals were cheap and the numbers worked.
Right.
As these deals get more expensive and, there's more money out in the marketplace to lend, terms naturally compress a little bit. So, I think we're seeing pretty regularly 2 and 10, on down the middle of the plate deals. That's typically what I've seen lately, but there's still some 3 to 4, point deals out there and 11 to 12% interest deals out there. Just depends on the nature of the deal or the background of the investor.
So these year-long notes, are these rehab loans? Are these acquisition and seasoning? What type of loan or what type of property, I should say, the use of the property are you loaning on?
Almost always rehab properties. I would say probably 90% fall into that category just because they tend to be shorter term in nature and there tends to be a higher opportunity. I did a loan, and actually I wish I could go back and write about 20 of these. I was in 2010. It was a loan that someone actually kept for 5 years and they paid 14%. It was unbelievable.
Nice.
But they bought this property at a steal. The rent was through the roof, and they figured, well, even at 14%, I might as well, keep renting this thing. They were making a premium even after paying me. And I love that deal. And the only reason that it ended was the individual that bought it, they got caught, in the market. They had terrible credit. They had to, give back some properties. And so they had to wait this kind of 5-year period where I financed the property out, where they were willing to give them a loan, and they refinanced out. I mean, they made a ton of money, and candidly, I mean, I made a ton of money over it because I was getting a point, every year in between, and I was getting 14%, and the borrower never missed a payment. I mean, it was a unicorn of a deal without a doubt.
Nice. You got to love that, man. You keep getting 14% and pulling some points here and there at the same time. That's really cool. Yeah, I could see where you'd want a ton of those notes sitting in your portfolio, man. Definitely.
Yeah. Well, especially a tax advantage account like an IRA, right?
Well, exactly. Especially now with, Corona, COVID, everything, and the $3 trillion that just got pumped. It is my mission in life to convert everything over to my Roth IRA now so that I don't have to. I will, of the mind, tax my seeds, not my crop, because my crop will be much, much bigger in the future if I do my due diligence properly and all that kind of stuff. So I'm on board with you 100% with that. And in fact, recently I am self-employed, but I'm just doing it through an LLC right now. So I'm going to set up a C Corp or an S Corp and then pay myself and my kids. So if my kids have earned income, what can they do?
Add it to a Roth IRA.
Boom, right there, up to the same amount. I told my kids, look, if I'll pay you minimum wage for the mostly internet research and doing some mailers and stuff, but busy work. And I told them, I said, I will match whatever you earn. I'll put it into your IRA because that's legally what you can do. So that's the plan. And that's sorry, I just went down that rabbit hole.
Yeah, that is a fantastic plan. And in fact, I'd even take it a step further, to say you could even look at potentially some health savings accounts, Coverdell educational accounts, and, inside for those kids as well, or in a health savings account for the family. There's a lot of money that you can sock away in a lot of these accounts. And so many people miss opportunity because they just don't look for it. You're doing a fantastic job. You're going to help your kids, forget about the money they'll have. You're going to teach them the power of compound growth. And that's what keeps the wealthy wealthy.
Yeah, no, right. It's was it Einstein said was the eighth wonder of the world's compound interest?
That's exactly right.
I think, leave it alone and watch it grow. And that's my strategy. Is what I suggest people do if they can, if they're in a tax situation, to just go ahead and start moving everything over little by little into Roth, pay a little now. And I've been, making my conversions little by little as the deals come through. So it's not a huge tax burden. It'll take me a little while to switch it all over, but hopefully I'll get to enjoy that money someday. But if not, then, it'll be passed down to the kids. Like I said, that's how the wealthy stay wealthy. So
that's a great strategy.
That's the whole point. So, all right. So you're doing mostly flips. You're out in Florida. Florida, that's a deed of trust or a mortgage state?
It's a mortgage state.
Okay, it is a mortgage state. Okay, so
Yep.
My understanding is with a deed of trust, there are three parties. There's the lender, the borrower, and then there's the trustee that holds title until the contract is complete. There's no third party in Florida then with a mortgage state then.
That's right.
So it's just the borrower and the lender. And so the lender retained title until the loan is paid off?
Nope. So the title is held by the property owner, right, which would be the borrower, but there's a lien on that title until it's satisfied. So once it's satisfied, satisfaction of mortgage is sent over to the county, and then the lien itself is removed from that, property.
Okay. Yeah. So it's very similar then. Yeah. It's just terminology and semantics, I guess.
Yep.
And you guys are nationwide, right? You guys.
Yeah, we have clients in all 50 states. Yeah, we've got international clients, both that live internationally and clients that even invest internationally. So, an IRA is a domestic product, but there's nothing that prevents you from making international investments. So sky's the limit in a self-directed account.
And there's something else, and I know we didn't speak about this earlier, so it's not really a curveball. It's a curveball for me, but you guys allow investments in cryptocurrency, do you not?
Yeah, we do. So, we're not the facilitator of the crypto investment. We're just the custodian of the entity that owns the crypto. So what we do in that manner is customer come to us. They say, I want to invest in crypto. We'll work with them to set up an entity, an LLC. The IRA will invest into the LLC, and then the LLC will participate in whatever crypto platform, storage, wallet that they choose. They'll keep track of everything. So it gives the most flexibility. You're not limited to what our platform offers. You basically have anywhere you can go open an account, you can go set up a crypto trading platform.
Nice. Okay. Do you dabble in crypto?
I do not personally dabble. I did own some of the GBTC, right? Global Bitcoin Trust stock, which is basically the Bitcoin, almost like a Bitcoin mutual fund type investment, publicly traded. So I did buy some of that, and I was fortunate to buy it at a decent price and kind of run the wave up and then part of the way back. But it was good. For me, it's funny, if you invited me to Vegas, I'd grab my wallet and you wouldn't have to even finish the sentence. I'd be on the next plane. I enjoy going and gambling, but that's where I keep my gambling, is I limit it to that. So, if I'm there for 48 hours and I'll hit the blackjack table, and I'm all about getting rich quick in that environment, once I leave Vegas, it's not gambling anymore for me. And, I'm not trashing Bitcoin or any other crypto by any stretch of the imagination. I actually think there may be a place for crypto in the long-term kind of holding sense, but I don't like to play the short game. I know a lot of people have made a ton of money in the stock market, truth be told, and I'm embarrassed when I tell this story, but I very rarely own stocks. When I do, I buy companies I think kind of have a good, fundamental business. But I am the guy that if you look at the COVID related drop and rise, if you kind of go to the very lowest point, I don't quite know. I believe it was March 19th. I think I'm a day or two away from that, but I sold Apple, Amazon, and Netflix, honest to God, at the very low of the market. And, they all three are at record highs. They've all significantly blown away where they were even pre-COVID. But, I don't buy stocks for that reason, because I don't know how to time them up. I don't know how to time them down. But what I do know is if I buy a loan or I invest into a loan and it's a good quality property that's got good financial backing, and it's a good quality borrower that has a high likelihood of being successful with the deal, I'm happy to make my 8, 10, 12, sometimes 14%. So like I said, I leave the gambling stuff to Vegas. And even though looking back, hindsight, I'd love to still own those stocks, knowing what I know today. But you know what? I haven't had to watch this game. I don't have to wake up with the stress. I'm happy with that stress, at the blackjack table. I don't need that in my everyday life. So for me, it's tried and true. Private lending and passive investing is the only way that I put money to work.
I'm right in line with you on the whole Vegas thing. In fact, I went a couple of years ago was the last time I went. And for the first time in my life, I did not gamble. I walked through both the Luxor and Mandalay Bay casinos daily and never cashed in anything, just kept walking. And that was a big win for me. And I'm still riding that win, because normally I'm penniless and I'm asking people for money so I can have a sandwich, friends or whatever.
Yeah. Well, Vegas, it will eat you alive. So yeah, I think everything in moderation has its point, but good for you. That's a strong sense of willpower. So,
well, now that's not going to happen the next time I go. Right. So I'm going to make up for lost time, because I myself, I usually start off at the blackjack table, get down, and then throw Hail Marys at the craps table and try to get back up, so.
Yeah.
But like you, it's more for me, it's just entertainment and blowing off stress and drinking what I think is high quality liquor when they're just watering down the well stuff.
Right. Well, quality goes out the window when they're free, right?
Oh, absolutely.
We care about quality when we pay for them.
Yep.
But Vegas has it figured out. If they don't take your money at the tables, boy, they'll take more else. But, my philosophy is simple. In 48 hours, there's only so much damage I can do. And it satisfies and scratches that itch. And for most people, they're scratching that itch today on the Robinhood app, trying to get rich overnight, because they somehow think that, they understand why Tesla went from being valued at, 80 billion to 250 billion overnight. And somehow they are smart enough to understand it, and they're going to get rich as a result. And they're all welcome to play that game. I'll take my 48 to 72 hour lumping every now and then in Vegas, and the rest of the year, tried, true, and steady is the best way to go.
Absolutely. And that's the beauty of private lending, right? You got a piece of property that if anything, if this thing goes tits up, bam, there's a piece of property that you can go get.
Yep.
And you're not going to lose everything. My first pillar of private lending is ROI, return of investment. So if I'm giving out 50 or 100 grand, I want to make sure that's coming back. Then what's the return on the investment after that? That's kind of my thing. So, and that's why I like the private lending, and I also like passive, because like you are a full-time employee of NuView Trust Company. That's your day job, right? And so the last thing you want to do is another day job flipping or running the contractors, or, you've got a good source of income, you maximize that. And then, like you said, passively on the side, you take your self-directed IRA, put it into the private loans, asset-backed lending, and I don't know, but private lending is one of the few investment vehicles that the common man can participate in, which you can get insurance policies to protect, the property. Being here from Houston, I don't know if you heard about this little storm called Harvey, and you guys being in Florida, hanging out there in the water, hurricanes happen, right?
Oh yeah.
They do happen. So I always require flood insurance, even if, it's $400 or $500 a year. And I always tell borrowers, flippers, they're like, hey, come on, don't make me get, I'm like, look, if $400 is going to break your deal, it's not a deal.
Right.
And I don't want to lend to you anyway. So, if that's a problem, then it's just, CYA. Because I want to say this last time when Harvey hit, because it wasn't a typical storm like you guys get, it was this, massive cyclone just coming up Florida with winds. And with Harvey, for us, it was just tons of rain, just rain and rain and rain and rain. And 80%, our understanding was about only 20% flood insurance. 20% of the homes affected had flood insurance. So that immediately went into my criteria that day when I heard that on the local news. So,
on that note, I mean, I preach, obviously due diligence being that we're in the, self-directed account space, but especially in private lending, title insurance, it's required. I have so many times that people have said, hey, listen, I know this deal. Do you care if I don't get title insurance? And I say, well, that depends. Do you care if I don't write the loan? It's a given. It protects us all, title insurance, hazard insurance, flood insurance. I mean, these are all things that are easily verified. And in fact, one of the things that is on my checklist for any renewal. So if somebody's going to do a 1-year loan and they're going to renew it, they better send me verification of hazard insurance, verification of the flood insurance, and if they have it. And then I also go onto the county's website and make sure the taxes are paid. And these things don't sound like big deals. And I'm not smart. I just check off a couple boxes. But I've seen so many deals go sideways where, why do I want to extend a loan for someone that hasn't paid the tax bill?
Exactly.
Or their insurance has lapsed. All that does is put me at risk. But furthermore, if they can't pay the tax bill, they're not taking an extension because this is a good deal for them. They're probably taking an extension because they can't figure out how to pay me. And the sooner I've learned in this business, the sooner that you act when you smell something is wrong, act. If you call me and tell me that you're late, listen, I'm a compassionate guy. I understand things happen. Tell me why you're late. Not an excuse. You got one opportunity. What happened? You go to Vegas. I don't care, but tell me what happened and tell me how we're going to get this back on track. Because if not, I am going to start the process as quickly and efficiently and expeditiously as possible. Because waiting 6 months, listening to your hard luck story while I may be empathetic is only going to ensure that I lose more money. And that's not how business works. So, those are all little things. I love that you talk about insurance because they're check boxes that private lenders gloss over. And it's that, and I love what's behind you, the never trust, always verify, kind of quasi Ronald Reagan, trust but verify, right? I think you're as honest as can be. Just prove it. That's all.
That's it. I got that because, I did a cardinal sin very early on. I loaned in the second position and, I stuck $30,000 in the wind for 18 months. And it wasn't so much that the borrower's plans didn't work out. She called me the month before it was due and said, hey, I haven't sold this property, blah, blah, blah. And so I looked into the foreclosure. Texas is non-judicial, so it's just go down, file it, pretty simple stuff. But I quickly realized that I had trusted her comps and her property value.
Yep.
And after I went through, paid the lawyer, got this thing sold and my money back, it was going to cost me money. So therefore, my money was held hostage for an additional 6 months. It was held hostage for 6 months. And in that 6 months, I missed out on a lot of opportunity costs, during that time for the same, basically, it wasn't that great of a deal. I did get a little bit higher interest rate. I got 13%, but I also learned don't chase interest rates. Make sure that they just put more money, skin in the game kind of thing. So yeah, my money, my terms. Look, I've met a few people that, I'm going to teach you how to get private money lenders and you're not going to have any money out of your pocket. Not with me. Now, I will do loans like that, but the LTV, the loan to value has got to be below 40%.
Yep. Right?
Got to be below. So yeah, I will say, yeah, you can, borrow up to 50, borrow that free money. I'm still in at 50%. I'm still protected. My money's still protected. So anyhow, that's just one of my things that I like to.
I love it. I love skin in the game. It's easy to walk away from zero. Right? You got to have some risk. And some of the things that we've done in some loans, and I don't know how valuable this is, but for the listeners today, but will require escrow, some of the rehab costs, depending on how aggressive the borrower is trying to get. And we'll actually pay out of escrow after work's completed. So, if you want, and we have an inspector go out, it costs them $50 every time the inspector shows up. So, and they want to take a draw. So we'll take, on a, say $100,000 loan, we may take $20,000 or $30,000, put it in escrow, and we'll give it to you as often as you want. So you want to go and paint the house. If we think that's worth $1,000 and the inspector goes and says, yep, house is painted, there's $1,000, but we're going to withhold 50 of it for the inspector's fee. And you'd be amazed, what you learn from people in that process, because it causes them to have to put some money up. And we're not doing it, I don't do those loans because I want to avoid writing the loan. I want to do that loan because it tells me if it's worth writing the loan. If you mean to tell me that the deal's so tight for you that you can't paint the property, or you can't go pre-order the cabinets first without having my money, then you got nothing. And if this thing lasts a month longer than you think, or your pro formas, get slightly off track, I'm in trouble. And so, it's a good test, and it's a little bit of work and effort and, managing it, but, it's prevented some deals and it's ensured some deals panned out so that you don't take something back, that you're thinking is going to have a nice new kitchen in it. And none of the work gets done.
Right. Absolutely. Yeah. The last thing you want to do is find out you paid retail for a piece of crap.
Right.
And unfortunately, I know some people who have. In fact, 2 weeks ago, went down in South Houston and videotaped. God, I'm showing my age. I'm sorry. Yeah, I'm a child of the 80s, the Atari generation. But anyway, we went down, I made a video recording of what I let the borrower, he's kind enough to walk through and say, these were my mistakes. He trusted the borrower. They took the lender down. He trusted the borrower, this and that. Ended up at the end of the day, he paid $130,000 for a house that's worth about $60 because all the money went up front and none of the work was completed. And by the time we showed up, there's nothing in the kitchen. Not only was there no new kitchen, it was gutted, right? So the escrow, who normally holds that for you guys in Florida? Is there a difference? Is it a title company or an attorney will hold it?
Yeah, any of the above. I mean, in theory, anyone can hold escrow. I mean, I'm sure legally,
right,
it needs to be a title company. But yeah, we always insure a third party. We do a lot of our deals in land trusts. There's some anonymity in a Florida land trust. There's also some value in potentially, every deal is different, but potentially easing the foreclosure process. So technically in a lot of our deals, the way that they're structured, it's not a foreclosure. If you don't make your payments to the land trust, you forego your ownership of the land trust. So the secondary beneficial owner of the land trust basically becomes the primary. So, if I write my loan to you and you stop making payments, you've just given up your right to be the owner of that land trust. The attorney, the trustee typically is an attorney, says, these are the terms, you violated them, you're no longer part of the land trust. And now the next beneficial owner, which is me as the lender or a group, if there's multiple lenders, is now the owner. And so, it's not completely bulletproof, but it's a pretty cool strategy to alleviate some of the headaches that come with foreclosures.
Yeah, it's almost, so it's like a built-in deed in lieu almost. Like, so if you don't make your payments, it's already set in the wording of the trust.
Yeah, so they're not giving up, in a typical loan, right? I give you the money, you have the title, and I got to come get it back from you if you stop paying me. In this environment, it says the land trust owns the property, right? And the beneficial owner of the land trust is you, so long as you do all the things that the agreement says you will do. If you fail to do those things, you're no longer the rightful owner of the land trust, and the secondary, owners basically take over. So it doesn't mean that, there can't be some legal battle. I mean, you could certainly, go out and file a lawsuit. But what I've found over the years is that most people, when they know they've screwed up, when they know they can't pay, obviously, and especially if an attorney is the one telling them that, hey, listen, you've got one more month to make current or you're going to forfeit your ownership in this land trust. They realize if I don't do it, there's probably not much recourse. And at that point, they don't have the financial means to, go out and hire an attorney. Not that it would do them any good, but just to try to stall the process. I mean, let's face it, right? Unfortunately, the eviction and foreclosure process is not about who's right. It's about following a series of bureaucratic red tape to try to get back, what really is rightfully yours. I mean, I'm pro-business. I understand people, have problems. And I think every good lender should work with their borrowers and every good borrower should work with their lenders. It's a two-way street, right? But unfortunately, that's not the way the world works. So, when you find good borrowers and they do what they say they're going to do and they protect your interests at all costs, those are the people that I want to write loans to all day long. And, you find that there's a lot of those people out there. You don't have to your point, go chase yield, right? I mean, you don't have to go, I'm perfectly happy at 8% writing a loan to someone that I've done 12 loans for, right? I know that even if this deal goes sideways, this person is going to, scrape their couch cushion to make me whole. There's not a chance in hell they're not going to pay me unless things have gotten so bad. And they'll pick up the phone and tell me that well before they get to that point. So, this is a business that if you're going to be in it, it is a business and you got to treat it like a business, and good customers deserve preferential treatment, and bad customers, if you're running a good business, there's no place for bad customers.
Not at all. Not at all. I agree. And I like how, back to your Vegas analogy and keeping your risk at the table. And then, the investment side, no, it's conservative, it's tortoise in the hare. And I'll take the tortoise all day long, because to your point, that embarrassing story about getting out of the stock market, did you make money?
Well, thankfully I made compared to what I could have made, I did. I yielded a positive return. But, here's the thing. There's no possible way I could have known what was going to happen or had any control. And, looking back, it's like saying, oh man, I should have held this longer. It's no different than saying, man, I pulled my chips off the table and there was 3 blackjacks in a row. Like, okay, well, it doesn't matter what happened after you left. What happened while you were there?
You're still positive.
Yeah. So
yeah, that's the good thing.
yeah, I'm not a very proud stock investor. I'm not a good stock investor. That's why I only buy a few stocks. And when it gets to be volatile, I'm out of there. I just want nothing to do with it. It's not my cup of tea.
Yeah. I around that same time, I basically piggybacked. A friend of mine texted me, and he has quite a bit of money. So he pays someone to do his stock trading for him. And I just, jokingly said, what'd you buy? And he just hit the list. So I got into some Uber, Apple, Google, anyway, a few others, and Boeing. Once Boeing hit bankrupt, or the government said they're going to protect Boeing, I'm like, well, then this is not capitalism.
Right.
Like this is just put my money in this, and okay, let the government, fund it. But I just piggybacked, and while I was just looking up to try to see I'm definitely up right now. It's through no genius or discerning mental capabilities that I have. My buddy was doing it. It sounded like a good idea. Someone who does this for a living told him to do it, and it's like, you know what? If this is better than just throwing a dart, so at least somebody's done some due diligence. I haven't, but somebody's done it, and so I just piggybacked, and yeah, it's worked out, and don't feel bad. I bought a $4 stock. I sold half of it at 12. I sold the rest of it at 24. It went to 180, split 3 ways, went back up to 150, split twice. But again, once you're off the table, it doesn't matter, man. And
you got to look at what you did with the money. The market is so hard, and my biggest issue with investing is, my philosophy is I need to understand when I make money, how, so I can do more of it. And I need to understand when I lose money, why, so I can stop doing more of it and
avoid it.
There's nothing in the market. If you ask me what I did right and did wrong, I would say, I don't know.
Mm-hmm.
As much as I'd rather be lucky than good in life, that's not how I invest. So, it's one of those, kind of going back to Bitcoin. I'm happy that someone told me about it. I probably would have never heard of it. I bought some, it went way up. I sold a good portion of it. I made some money, and, I don't even look at what it went up to or what it's gone down to. And, I could keep playing that game and buying and selling and trying to ride the wave up and ride the wave down. And I don't have the patience, certainly not the skill set. I think most importantly, I don't have the blood pressure medication to manage through that process. So I like to stay in my lane. I like to know what someone's going to pay me in advance. I like to know what my downside risk is. I like to know I've got protection. And then I like to know that if I'm successful at this, I can do it again and rinse and repeat. And
yeah.
Boy, that's a good feeling.
It really is. And like you said, you do 12, 10 loans with somebody, that's a true private lender.
Yeah.
I love how people say, I'm a private lender. No, you're a hard money lender. You're taking, you're just marrying people, whatever. I mean,
right.
So, it's semantics. I know we're splitting hairs, but at the same time, no, that to me is a true private lender. You have a personal relationship with somebody. I've got, guys that I will agree to the loan on the phone. Now they got to send me everything, but I'll go ahead. They'll tell me about it. And I trust them. I know their business. They've been doing it a lot longer. They went through 2008. They're seasoned as an investor. And yeah, they'll provide me everything. And I've got one guy, I haven't loaned to him in a while, and he's gone more into the commercial space and wholesaling. But I call him, I was like, man, come on. Like, you got to do something. He's like, oh, I'm wholesaling. I'm like, no, man, I got money. Like,
right.
I said, your LTVs are out of sight, man. Like, I will loan to you day in and day out. And so he's like, okay, well, he's keeping in mind, he's looking, like everyone else, we're waiting for the bottom to drop out, so we can get in on some good deals. But that's, having that relationship, being able to say, yeah, I'll do the loan. Yeah, I'll still vet it. I'll look at the numbers. I'll run my own comps, for example. But yeah, that's having that in your back pocket is such a powerful tool for a real estate investor. And having that investor in yours as a lender is a very, very powerful tool. So
win-win. And those are the best kind of deals.
Absolutely. All right. Well, tell us a little bit about NuView Trust and how we can get a hold of you guys or learn more about, your self-directed IRAs, the crypto. I'm not going to lie. There's a scratch. I'm going to have to scratch that itch into that there, just because for me, crypto is pure speculation, but I want to put a little something, out there.
Speculation is not a bad thing when you call it speculation from the get-go. right? I mean,
Yeah.
there's nothing wrong with, being in Florida, obviously we like to fish, and there's nothing wrong with throwing that big old hunk of bait out there that, 9 out of 10 times, it's probably not going to do you any good, but the 1 out of 10 times it does, boy, it could be really good. So,
Yes.
I'm with you. There's a place for speculation. And as long as it's a small, insignificant piece of your portfolio, I think everybody should have a couple of big lines out in the water. So, but NuView Trust, we're a custodian. We hold retirement accounts that hold private lending and any other variety of non-public investment. We've been in business. We've got nearly $1.5 billion under custody. So, we've been there, done that. We're a South Dakota chartered trust company. So we've got our compliance office in South Dakota from a overall corporate compliance. And then we have our administrative office, which handles more of the day-to-day operational activities with our customers, which is based out of Florida. Easiest way to find us is the web, NuViewTrust.com with a U, NUVIEW Trust.com. Chock full of information. We got a ton of events and educational content, some recorded, some upcoming, that's all posted there. So take a look, and certainly happy to help have these discussions on a one-on-one basis with our team if you think it's something that makes sense. We can walk you through kind of how it works and, give you the pros and cons and let you make a decision if it's the right tool for you.
That's great. NuViewTrust.com, right?
You got it.
All right. Well, Jason, thank you for coming on. I'm going to have to come to Florida. I like fishing myself.
Perfect.
Maybe if I do open up a crypto account with you guys, maybe we can go come on a Friday. We can go fishing early some Saturday. But I might be a private lender, but I'm 100% redneck. I love the outdoors. So
well, good. Well, you'll fit in great down here with us. So anytime you want to come down, come set up your account, and we'll use it as a cheap excuse to get out on the water.
Awesome. That sounds good. Jason, thank you so much. Remember, everyone, go to NuViewTrust.com, NuVIEU Trust.com.
Thanks, Heath.
Take care, man.
All right. Take care.
Baba Booey.
And there you have it, everybody. I want to thank Jason DeBono from NuView Trust Company for coming on the show today and sharing his time with us and his insight as well. For more information about Jason and NuView Trust Company, please head over to the show notes page at privatelenderpodcast.com, episode 108. And as always, I don't charge money for this show, but I do ask that you please help spread the word and increase awareness by leaving an honest rating and review over at iTunes, Google Podcast, or whatever platform you are using to hear my voice. An honest rating and review is the fastest and most effective way you can help contribute to the show, and I'd also really appreciate it if you did. All right, it's time to wrap it up. So until we meet again, please stay safe, stay healthy, and stay free. I also wish you safe and prosperous private lending. I'll catch you on the next episode. Y'all take care.
Thanks so much for listening to this episode of Private Lender Podcast with your host, Heath Baker. For more great content and to stay up to date, visit privatelenderpodcast.com. If you enjoyed today's episode, please rate and review.